Bill McDermott, the co-CEO of SAP, the software giant for businesses around the world. Bill, great to have you here.
Thank you, Betty.
Up from down south Philadelphia, right?
You got it.
Bill, so Dell results, on this business spending, which, sounds like it's quite encouraging. Yeah. Give me more specifically what you were seeing in your business that could corroborate what Dell is seeing.
Well, first of all, Dell had a very strong quarter, and not just in sales, but also in profits, and they're selling strongly into businesses. The business environment is strong. It's gotten a lot stronger in the last year, and companies are investing again. They're investing in things that actually innovate or change the way they do business. So if it's high-speed analytics to have better insight as to what your customers and your suppliers and your business networks are doing, right, they'll invest. And in the case of Dell, obviously their servers and their big iron helps those things perform. So there's the results. What's
changed? I mean, you said the last 12 months, but within that 12 months, we had heard that businesses were holding back because they weren't sure about the tax, reform, tax rates, and all that. So has something changed in the last, let's say, 3 months?
Without a doubt, companies have cash and they have to invest in business outcomes. So I look at this as strategic IT. People aren't necessarily interested in upgrading their PCs to new PC fleet, but they might be very interested in mobilizing their workforce and connecting their frontline workers to the boardroom, so when the CEO makes a decision, the applications can be provisioned to the workers on a device, and the business process and the business network can be extended on an end-to-end basis. That's strategic IT. There's plenty of money on the sideline to invest in that.
Okay. Are they making their decisions quicker?
They're definitely making their decisions quicker. Sales cycles that were 6 or 9 months in IT are now 3 months.
Okay. And I think, Bill, you said before that you had to be very creative when it came to your customers with their CapEx budgets, right? They weren't tapping into those. Now they are. Yeah. What are they doing? I mean, how many more customers are you getting? Give me a picture of what's going on there.
In our business, in the most recent quarter that we announced, our deal volume was up 38%, which simply means there are many more transactions taking place than in the prior year. This is happening in the BRIC countries, of course, where Brazil, Russia, India, and China are growing very, very fast. But even in the mature markets, deal volume is up in double digits. The other thing we're seeing is large deals are up significantly. In our business, deals that were greater than 5 million euros were up about 38% year over year. So you're seeing big deals and you're seeing transaction volume increase significantly. In 2009, you bring up a good point, there was a lot of OPEX money to be invested.
Right.
Companies did not want to invest CapEx because they were tightening up everything. Now
they had to keep that cash,
They had to keep that cash. So now, clearly, CapEx is back and OPEX is there too, so you're getting the force multiplier both coming into the economy.
Bill, you've got quite a bit of cash on your balance sheet, don't you? Something like $4.7 billion?
Right.
Are you putting any of that to work?
We obviously right now have just made a large acquisition about a year ago.
Sybase, right?
Sybase, because we wanted to be not just the company that led business processes end to end and was the #1 business software company in the world, but we also knew things would move to the cloud and we needed to mobilize workforces all over the world. So if you're a spaza shop in South Africa and you have to use SMS messages to optimize your business network, or you're a company like Dell that wants to connect the CEO to the shop floor, this mobile business application is going to take over everything.
That's where you want to be then.
You got it.
We're back with SAP co-CEO Bill McDermott, whose company is listed both here in the U.S. and also over in Germany, in fact. Anything changed, by the way, with this deal for you?
Well, in a certain sense, you're seeing, the world become a much more flat place, and if you look at the move from GAAP accounting to international financial reporting standards and the role SAP plays in that, the consolidation and the harmony of systems coming together on a global basis, these are all areas that we excel in and of course will play a role. But I'm quite confident NYSE and Wall Street will still be the epicenter of the capital markets.
That's right. And it's funny because Arthur Levitt, when I talked to him earlier, the former SEC chairman, had said this is really about international accounting standards, getting those standards up for these companies, or at least that is part of this whole deal. Talking about deals, right? We've seen a lot of technology M&A, and I'm just curious, Bill, from your point of view, as you're having dialogue, as you're in dialogue with the boards, What is going to trigger for you an acquisition to spend that $4.7 billion that you have in your balance sheet? What's the dialogue going on within the boardroom?
Well, we have a strategy, and what we do is stick to the strategy. And we said a long time ago we were going to make the world run better. And we do that on-premise, on-demand, and on-device. And we would be the category leader in business applications in 25 industries. We would have cloud computing and a leadership role to play in cloud computing. We did this with Business by Design. And we would go with the device to mobilize the world and democratize information on devices so companies ran better.
Right.
Anything that takes our leadership position and extends it in these areas would be interesting to us. However, we have an organic growth strategy with tuck-ins as our strategic direction. So it's unlikely that you'll see us do any of the big ones because it's not in our strategy.
Okay, but so outside of that then, what do you think though, what are boards asking their CEOs right now, whether or not they're going to pull the trigger?
I need you to grow. How are you going to grow? So growth is back on the agenda in the boardroom, and the CEO has to have a growth strategy. The cost cutting, the leveraging of margins, it's over. You did that in 2008, the back end in 2009, and a little bit in 10. Now it's how are we going to grow this place again? Okay. If you don't have an organic growth strategy, you better have a good partner strategy and a good ecosystem strategy. If that doesn't come together and get you the number you need, you better do some M&A. That's what's going on.
That's what's going on. All right. And behind that will be jobs, right?
Absolutely. You take the Cisco situation, a lot of their decline was attributed to the U.S. government business at the federal, state, and local level. Right. So if you look at companies that have a large majority of their sales tied up into one sector, and that sector gets hit, they obviously suffer. What we try to do is spread our portfolio in multiple industries, multiple geographies, because at any one time, something will be down and you need to cover it with other things that are up.
Well, that's what Cisco thought it was doing, though, was it not? And then it got hit in this one area, though, with government.
Right. And frankly, I think probably Cisco at this point is looking for other areas to grow with very new innovations and new technologies. If you look at it overall, though, the business environment is stronger than we've seen it in years.
Right.
This is a very robust IT environment. Companies have to invest, they're refreshing their technology cycles, and they have to innovate and they have to grow. You cannot innovate, you cannot grow without technology at the forefront of your business strategy.
Bill, before we let you go, I got to ask you, though, about the legal dispute with Oracle.
Yeah.
I've got to get that on the record. I know that SAP ordered to pay $1.3 billion to Oracle. Are you going to appeal that decision?
Well, we're waiting for the judge to make her final decision on what the award would be, and obviously we'll look at post-trial motions and the various opportunities we have to reduce the claim. That's true. But I think the key is there's a lot to be learned from this, because you have a very small M&A, 10 million company, that didn't act the right way, but no big company, in this case SAP, really benefited from it. So companies have to really watch their governance and make sure when they do M&A, they protect not only their interests, but they take charge of the interests of the small ones that they buy, because if you don't, bad things can happen.
All right. Bill, great to have you with us.
Thanks
so much,
Betty.
Bill McDermott of SAP.